Heard lots of differing views from the fintechs, Kareem, and you heard from the COOs, and you heard from different aspects of the banking market on innovation and disruption. What was your understanding of where we are at the moment?
Thank you, British. Thanks
Pleasure.
for having me again for this in the second year. As you said this morning, I feel we are still in the banking industry confused at best, and some of us are still in denial. And were surprised by the massive technology advancements that came fast and sweeping. We got also surprised by the fintechs and all those third parties who are adding to the ecosystem. I think we need to relax a bit and think about it and take it from the theory of banking and our existence, which I put it in this way: as long as the monetary theory that has been in place for hundreds of years now will remain the theory, banks will remain in their places. So we need to reconcile with those new entrants to the markets by accepting that, and instead of competing and feeling a threat from the fintechs, we complete each other. Neither a fintech could be a bank. I mean, with all respect to the many successful stories, and Kareem is one of them here in the country. What they're doing very good stuff, very successful businesses, but they will never be a bank. The first question they will ask when they collect 100 dirham, where we will settle that. So then you need a bank which is backed by a central bank to settle that. So let's relax and start to complete and cooperate instead of feeling a threat by the new entrants and by the technology. Banks will remain banks, and what I've been listening to yesterday and in many other conferences relating to bankers, as if we were taken by surprise and we are trying to reinvent the wheel. The wheel is already invented, and day one in my career, 25 years back at ANZ Bank, we were told that customer is always right. So we were aware of customer experience at that time and the importance of customer satisfaction. We just need to utilize the new tools to get more insights, to be more speedy, to add additional services to the scene. And that's on banking in general. Part of my advice, part of the organization, all these changes are coming, and we are still in banks facing them with the same mindset, with the same structure, with the same kind of procedures. And what have been created in a rush, and many of it was filling the gap. So I think in banks, and let me be a bit selfish to the COO area, it's time for COOs to claim the spotlight. You are in retail banking, you're bringing revenue to the bank, and we can also prove to you that operation is bringing more money to the bottom line sometimes than you do. It's your job to bring revenue. So by having this flag every time waving, I am the revenue guy, you cannot put everything in your hand. So COOs has to claim the spotlight again. And think about it. Each and every department in the bank, from risk to compliance to corporate to retail to even customer experience to digital to data, has demand on the operating functions, IT, operations, whatever. So part of my advice of a redesign internally that you put under the COO a mini bank, where under that mini bank, you will have business people, you will have customer experience people, you will have data specialists. And guess what? We're facing the data with non-data hiring. How many banks in the region has hired a full math graduate?
So on that note, you are what I would call a data champion. What do you see as the value of data within banks? And is it underutilized by the banks?
I think it's underutilized by the banks and underutilized in many other industries. Data is important, of course, and data has been always available. And with technology today is even increasing the levels of data up to the terminology we call it data lakes, because we are now turning many of what used to be offline data to online data. So data is there. It's about the utilization of this data. You need the right skills to look into the data. It is important. It will, of course, contribute to the efficiencies. It will, of course, make the decision-making more accurate by giving you the insights, more scientific. It will minimize the bias in any decision-making process. So it's there and important, and we just need to use it in the right manner.
And what about, there is a big term that says the people who will succeed will take the data and convert it into information. So you'll take the ingredients and convert it into a meal that somebody wants to eat. What is your view on analytics?
That's true. See, again, even after you, that's the first challenge. You convert the data into information and into insights. That's the challenge number one. Challenge number two is even how to read these insights. Because you and me looking at the same dashboard of certain KPIs, we might have different interpretations of the same KPI, the way you look at it. So here, what I mean, you need people who are really well-trained and data sensitive and aware of how to read these ratios and how to put them in front of you. More importantly, with the technology advancements, data and dashboards can be made real-time online. One of the cases we were working at is that making available for our customer service officers in the branch a dashboard of their major KPIs that are getting updated real-time online on a year-to-date basis. Any minute a transaction happens. So this is the next challenge, internally. Then banks has to also look outward to their customers, providing them business intelligence services.
Okay, so you can take the data, you can analyze the data, you can look at operational trends, you can look at customer trends. But my view is, as a bank, you can never stop the march of the fintechs for two reasons. One, you are regulated, they are not. And two, they will take the easiest pieces of the business, so payments.
Of
If
course.
you look at all the fintechs, why does Facebook has 144 banking licenses? Why doesn't Facebook have a bank? Because it doesn't want to be regulated. How can you stop this?
I don't want to stop them.
But they'll take your most profitable business. And you'll be left with what?
How they will take it. This is the point. That was part of my first introduction. Let's complete versus compete. Fintechs will be there. Look at the PSD2, open banking in Europe. It has been regulated right now, and it allows for 3 different types of new entities. One of them is only account, information, services, providers. That has become a fact. But I'm still there, part of the ecosystem as a bank, and I'm still needed, and my services are needed, and even the PSPs, the payment service providers, will make 100 circles and come back to me. So I don't want to stop them. I want to get benefit from their services and from their innovation. So that has become a fact. In Europe today, they are regulated, and collaboration, which is optional in its nature, has been made mandatory in Europe by BSD2. So fact on the ground, accept their existence and try to utilize their services. And instead of saying, I want to fight with them or I want to stop them.
So how do banks really innovate? Because one of the points that was made, I think, by Sandeep from Mashrek was the outside is digital, but the inside is still analog. You have this legacy, and it's not just legacy systems, it's legacy thinking.
I cannot disagree. That's a very important question, of course. Digital, see, these days in any conference, every 3 words, the 4th is digital. Every 3 words, AI is the 4th word. Digital is not a divine recipe. Digital is nothing but a description of the current technology capabilities.
But most banks think digital is a product. It's not, it's a
It's
way
not.
of doing business.
This is the point. It's not. That's why when even I created from scratch a digital department in my ex-bank, first we had a discussion about 2 hours. What is digital? Digital is technology. In my opinion, it's a description of the current state of the technology capabilities. I do agree with Sandeep. This is the school that believes in quick wins. Let's clean the front of the house and put the garbage in the backyard. They will pay the price time soon. If you want to bring the most precious stones and marble in the world, make sure, which is digital in this case, make sure you put it in a very strong cement foundation. Otherwise, cracks will start showing next week. How we can do that? Innovation labs, for example, one of the recipes. But how you do an innovation lab? Who should be in an innovation lab? Banks, again, back to the basic argument, need to look into whom they are hiring. It's unfair to bring someone, to pick someone from operations or branches, 5-year experience guy, and tell him, guess what? You have 5 years banking experience. Please look into this process on a holistic end-to-end basis to re-engineer it. They cannot. You have to face it and start hiring engineers. You need your operation managers or head of operations who's a graduate of accounting to bring to you mechanisms of operations optimization, efficiency, effectiveness. I'd rather hire someone who's an industrial engineer graduate to do that. They are the best people taught in universities to manage operations. Because, I mean, Lean, Six Sigma is not the invention of banks. It's the inventions of car companies. It started in the manufacturing fields. We're just followers to that. So your head of operations, look at it, face the reality. If you look at their competences after 25 or 30 years of experience, they know the regulation, they know how to issue an LC, what is needed to do, and a guarantee. But the real operation science of KPIs, Six Sigma, waste reduction, re-engineering of processes is something is unfortunately not taught in business schools. So in your innovation lab, you need to think of having a mathematician, industrial engineers,